I'm Alan Kenny, Editorial Director with REIT.com, and I'm in San Francisco for REITWorld 2013. Joining me is Steve Brown, Senior Portfolio Manager and Senior Vice President with American Century Investments. Steve, is an environment of rising interest rates a net positive or negative for REITs?
Well, that's a timely question because we've seen rates rise somewhat this summer, or on talk of tapering, and the REITs sold off pretty dramatically. I think short term, a rising rate or the advent of rising rates is viewed as a negative by investors, so there could be some pressure on REIT share prices. I think longer term, I think say 12 months or so, if the reason rates are rising, interest rates are rising, is because the economy is starting to expand, employment's picking up, and incomes are rising, then that's a good environment for REITs. They'll be able to show growing rents and growing dividends. So I think if investors stick with it, they'll be rewarded with some attractive returns if a rising rate environment is accompanied with an expanding economy.
Do you view this as a stock picker's market for REITs?
Well, I think it's a combination. We've seen, for instance, some property sectors are doing well or doing a lot better than others in a rising rate environment, such as hotels or industrial or regional malls, because of the expectation of an improvement in the economy. I would say, though, that there's still a lot of unique stories in the real estate universe that would lend themselves to a stock picker's environment.
And lastly, give us a sector that you think people might be kind of underestimating right now.
I think the hotel REIT space is still underestimated and perhaps underowned in the investment space because the supply-demand fundamentals there are still very good, and that we're beginning to see other aspects of the U.S. economy improving, like group business and business and things of that nature. And the real cutback or the lack of financing for hotel construction on certainly the upper scale properties is allowing landlords or REITs that own hotels to continue to see improvements in RevPAR. And we're still below peak levels of room rates and RevPAR from the 06-07 period. So there's still upside there with very little new supply on the horizon.
Okay, well, as always, thanks again, Steve.
Thank you.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.